Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Blair, Hannon, Head of Investment Strategy, Global X, to discuss ETF market development in Australia. Blair, it's great to have you with us. Welcome to Trade Talks.
Thanks so much, Jill.
You got it. And tell us more about Global X in Australia.
So I think, look, for many US investors would know Global X. It's been around for over 10 years now. A very well-known ETF business. Not the case in Australia. It's relatively new, but look, we came into Australia last year. We actually acquired a reasonably sizable ETF business called ETF Securities, and on the back of that acquisition and that merger, we're now a sort of $5 billion AUD player. We've got 27 products, and look, the merger was great because what we found was, the Global X, the Global X in the US, it's in London, Hong Kong, it's in South America. They stood on a few pillars that actually align quite well with ETF Securities in that merger. So areas like thematic investing, income investing, commodity type investing. And when we think about what that is for the Australian market, which is obviously slightly different than the US, we would never just go, okay, we're going to bring out all the US products. We want to know and make sure that the products that we are going to deliver to Australian investors actually are going to work for them. So, like, what are the products that have worked in the US? Is that still going to work for Australia? If that is the case, we'll try to bring them down here and then deliver them for the Australian market.
As a key player in the local market, share with us Global X's market outlook for this year.
So going back to that, sort of what our pillars are in investing, that's how we look about the market rather than just giving a number for the S&P 500 or the local market. So where we think the markets are going to focus on is probably three key areas. One is in that, and we saw this certainly in the back of 2022, the renewables and decarbonisation space. We saw again, 2021, 2022, ESG being a really big theme, and it obviously struggled last year with the exposure to technology companies. For a lot of investors who want to play those themes rather than sort of broad-based, but more in thematics, decarbonisation and renewable focus through areas like the commodity space. So, we know that green metals and copper, those sort of areas are very much going to benefit from the drive and change in infrastructure for renewables. Areas like carbon credits, that's certainly out of the US and UK. Again, different ways to play that sort of focus, which we know is long term, which is exactly how you want to play thematics. I think secondly, on income, we know that fixed income was difficult to invest in for quite a while. It was pressure on the price, but obviously, the yield wasn't there for many investors, and that has changed. So we've seen a lot more shifts back around, whether it's that 60-40 portfolio or whether it's just playing that income in fixed income and getting that actual yield, getting around 3, 4, 5%, which you just could not get over that past 5 years. And lastly, I think would be gold. Gold really probably didn't play the role we thought it was going to play on the back of a year like we saw last year. But we've seen that bounce back really strongly early in 2023, and we expect that to continue. So we have started to see a lot more broad-based building around what gold does in a portfolio, what sort of diversifier it is, how it performs differently in different markets, and I think that's going to continue as well.
So Blair, how do you see the ETF market developing in Australia as you look a little bit longer term?
So look, we're still in the nascent days if you compare it to the US or some of those sort of really, the UK or in Europe in terms of those markets for ETF. We expect to see a very strong continuation of ETF inflows. The broader market in Australia was down last year, as you would expect, being beta-linked products in ETFs. But we still continue to see inflows. And like the US, we are seeing flows from unlisted mutual or managed funds into listed products like ETFs, and we expect that to continue. As investors also become more comfortable with ETFs, what we're seeing is rather than utilizing those sort of more broad-based, very low-cost index type products, we're seeing them diversify into areas, more specific areas, more niche areas like thematics, and we expect that to continue as well. And then lastly, what we're seeing in Australia is certainly active managers play a really key role in bringing new products to the market. And we expect that to continue. We know that the Australian market having access to the listed space is great for an active manager compared to, again, using those traditional sort of unlisted mutual or managed funds. So we see that's probably a really strong growth area too.
And you recently launched the Nasdaq 100 covered call ETF. Tell us more about the key benefits of the product and your launch plan.
And going back to that point, we know investors, Jill, are really focused on income. It's been difficult to get that income, but now as the market has shifted, as we've seen interest rates rise across the globe, the income is probably a little bit easier to get. I think the other side of it is we know that when such a core tenet of what you do from a portfolio building point of view is diversification. We really see that you need to diversify your income sources as well. That is actually a vital piece around how you're getting your income and where you're getting it from. So whether that is from equity-based products, we know there's some really great equity-based products out there that they deliver high yield, whether it's from fixed income, again, getting that sort of fixed income as a balance of a portfolio, or in this area, what we like to call alternative income, where it's like, building a covered call strategy into an ETF. So traditionally covered call strategies, whether they're individual investors, were difficult, maybe more for sophisticated investors, those investors that want to take the time and inclination to go in that space. Now, this has become, packaging a covered call in an ETF makes it much more accessible for an everyday investor to access these yields. And these yields can be significant. We know you're getting the underlying dividends of those companies that you're invested in. Plus, on top of that, you're getting covered calls. Understandably, there's always some risks around, you're really capping that upside with a covered call. But for those investors who are really focused on income and want to pair that income with other parts of, an equity portfolio and a fixed income portfolio, we've seen really strong success in the US markets of this to access income and grow that income source. And we expect for Australian investors that to be the case as well.
All right, Blair, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.